Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is November 10th. It's Friday, TGIF. In this video, I'm going to kickstart your Forex trading day with a look at the Euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So sit tight. Let's start by taking a look at the daily chart in this in the Euro versus US dollar. And on Monday, the high price was reached in the Euro versus US dollar. It entered into this swing area going back in time between the 1.07509 and 1.0805. I know it's wide, but it's on the daily chart. The price found resistance sellers. Also near that level is a broken 38.2% or the 38.2% retracement of this move to the downside. That's important. Why? Because we like to see when the market trends to at least get above the 38.2% retracement if the corrective move and the buyers are taking more control. Well, they couldn't get above that 38.2% retracement, and so we started to see this rotation to the downside and trading this week. We made a new low for the week in trading here today, as you can see. But the importance is that the 38.2% held. So the bias is more to the downside here in the Euro versus US dollar on the daily chart. Now let's take a drill down to the hourly chart and see what that says for us. And as you can see, here's that 38.2% retracement, 1.07637. We got with about 7 or so pips of that 38.2 and started to rotate to the downside on Monday and Tuesday. On Wednesday, we moved higher. On Thursday, we moved lower. And trading today, we are moving higher. Now, off of the this shorter term / medium term chart, we are seeing that we did find support against the 200-hour moving average. That is, we did move a little bit below it, but as you can see, the sellers could not push any further. So the sellers had their shot. They couldn't connect, and the price started to rotate to the downside. Now we are still also below the 100-hour moving average, which finally has started to move back to the downside. During this week, when the price started to come down, it was still moving higher and higher and higher. Now we're starting to rotate to the downside, so that's sort of leaning over. So we are in between the 100 and 200-hour moving averages. Again, the daily chart is more bearish because it couldn't get above this 38.2% retracement, but we do still need to get below the 200-hour moving average in the short / medium term to increase the bearish bias. So keep that in mind. You can trade in between here for now, but what we're looking for is a break in either direction, and sort of, if we go higher, we're going to have to get above that 38.2. If we go lower, then we're going to start to look toward the 50% retracement level on the downside as the next key target. That's of this last move to the upside from this low to this high right there. Okay, let's take a look at the dollar versus yen, and we'll start off by taking a look at the daily chart. And what we saw in trading last week was that the high price right through here came up really close to the high price going back to 2022, and that high price was a multi-decade high. So key level, and we got close to it, but then rotated to the downside and trading this week. We are seeing a rotation back to the upside. You can see 1, 2, 3, 4, fifth trading day to the upside here for the dollar versus yen. The trading range today is very narrow, as you can see. But if we do get above the 151.938 going forward on this daily chart, that would increase the bullish bias. Again, multi-decade high for the dollar versus yen above the 151.938 level. So be aware, be prepared, and understand that dynamic. It would be more bullish. So let's take a look at the hourly chart to get a view of where we stand from this perspective. And here's the trend move to the upside in trading here this week. We just continued its steady rise to the upside and trading here. What we're seeing again is a modest increase in trading here today. But we did get above the next key targets. Those key targets came in at the 151.23. That was this high price right through here. And as you can see, the price came down in the Asian session a little bit below that level and then rotated to the upside. We also moved above this these swing highs right through here near the 151.39 level, and traded above and below it. But the last 4 or 5 hours have been trying to hold support against that level. That's going to be a short-term trading bias in trading here today. If the price can stay above the 151.38 level, that's best case scenario. And we'll start to look toward that, toward the high price from the end of October that came in at the 151.71-ish type area. Again, that approached the high price going back to 2022 at 151.93. So the high price of this This year is around 71. The high price, the multi-decade high is 151.93. Keep that in mind. Let's take a look at the sterling versus US dollar. And on the daily chart for this currency pair, what we did 1, 2, 3, 4, 5 on Monday was we came up and tested its 200-day moving average. That's a green line in this chart, 124.34. And what did we do? We found sellers willing to lean against that level. Now, having said that, the 38.2% retracement right through here has was a we did break below it in the beginning of October, but could not sustain the momentum, and then came back down toward the end of October, retested that level, and found support buyers again. So remember what I like to see when we have trending markets, and this is a trending market from this low right here to this high right here, is a correction and move below the 38.2% retracement. We did get it, but not a lot. We are that's as a result we saw the move up to retest the 200-day moving average. So overall, on the big picture for the sterling versus U.S. dollar, we're battling between the 38.2% retracement and the 200-day moving average. Both of them are key technical levels from a longer-term perspective. And we couldn't get above the 200. We couldn't get below the 38.2% retracement. So we stay in between. This area between the 121.87 and 122.27 is a swing area. Going back in time to these period right through here, again, admittedly it got a little messy, but you can also see other times where the price did find resistance within this area, especially through here and through here. Getting below 121.87 would be somewhat more bearish here for the sterling versus U.S. dollar. Let's take a look at the hourly chart and see what that is telling us. And from a technical perspective, we fell below its 200-hour moving average in trading yesterday, and that tilts the bias more to the downside here in the short/intermediate term. We're also below this swing area through here, where we had a number of different swing highs and lows at 122.19 to 23 or 32 we did try to move above it here, but fell short of the 200-hour moving average, short of the 50% retracement as well. By the way, this is going to be a key level going forward. Why? Because it's a 200-hour moving average and the 50% retracement, and that 200-hour moving average is starting to flatten out. So you can imagine that it would those two levels would be very close to each other in the short term here. So that level is a ceiling if you're more bearish on the sterling versus US, and the bias is more negative here off of the hourly chart. Then you would not want to see the price move above the 122.48 level. That would be a key risk-defining level where traders can define their risk, limit their risk, and accept their risk, and in hopes that the price does something like that to the downside and starts to work toward our lower swing areas. Obviously, lots of ups and downs through here, so you can pick your spot basically and find support. But I have earmarked the 121.57 to 67 sort of as the next target on the downside here for this currency pair. So there you have it, a kickstart with some detail looking at daily chart and hourly chart for each of the major currency pairs: the euro versus US dollar, the dollar versus yen, the sterling versus US dollar. My name is Greg Mikulowski. Good fortune through trading. Bye-bye now.